Good evening, ladies and gentlemen, once again. We apologize for the delay, but I believe that we are ready to start now. To kick off the call, I would like to welcome our CEO, Mr. Faiz Arab. Welcome, Faiz.
Thank you, Winnie. Good evening, ladies and gentlemen. Firstly, I would like to thank everyone on the call for taking the time to join us on this first time DSE's half-year results call. I would like to firstly welcome Lucas, the CFO of DSE. I think Peter will join us shortly, but Lucas will take us through a short presentation. Right after that, we will have a Q&A session, and we will have a closing after that. So, Lucas, welcome.
Yeah, thanks, everyone. Good evening. As it has been said, I will take through the financial performance for the first half of the year 2025. And when we are looking to the group performance in terms of core revenue, we are reporting that for the first half of the year, we managed to record a core revenue of 6.166 billion. But when we are comparing to previous year, we recorded the 3.616 billion. So we have seen the significant growth in terms of performance, and this has been attributed by improvement in equity and bond turnover, together with the increase in listing fee on the government bond. As we all know, in previous year, we had a couple of government bonds which were reopened. But for year 2025, for the first half, we have seen most of the bonds that were listed in the stock exchange were new issued one. And as per our DSE rules, for new issued bonds, it attracts higher fees compared to the reopened bonds. So that was the main reason for the increase in the core revenue for the first half of the year. And when we are looking on our operating profit, it also has jumped up to 1.773 billion compared to the same period in last year where we recorded 464 million. In terms of our other income, where we are referring to the investment income, we've seen that for the first half of the year 2025, we've managed to record 1.613 billion. So this is a slight decline from the previous year income of 1.782 billion. And we are reporting that investment income has decreased this slight. As we all know that DSE has moved to our new office premises at Morocco Square. So there were significant outflow for payment of contractors. Also in the first half of the year, DSE declared a dividend, which also contributed to the decline of investable income for the first half of the year. And when we are looking on our expenses, have slightly jumped up to almost 4.394 billion compared to the same period of 3.151 billion. And the same has been increased due to increase in the number of head count, where we will increase the number of staff for the year 2025 compared to previous year. Also, the significant business development expenses due to the increase in the areas of advocacy and the public engagement and the awareness, all have also contributed to the increase in the equity turnover and the bond turnover. So can you go to the next page? So in terms of profitability, we are reporting that for the first half of the year 2025, we've managed to record a profit of before tax of 3.38 billion. When we are comparing to the same period of last year, we had a profit before tax of 2.197 billion. And the same has increased, as I have explained above, mainly due to the improvement in the equity and bond turnover, together with the increase in the listing fee in the government bonds for the period under review. Next page. And then next. So in terms of when we look at our balance sheet, in terms of total asset, we've seen that our balance sheet total has increased to 38.278 billion compared to the same period of last year where we were around to 35.86 billion. And the same as we have explained, the increase in funds that have been obtained from the operation has caused to increase in available cash. Also, the payment that we've made to the Morocco Square building where we are sitting has also increased the amount of non-current asset in our balance sheet that is caused to jump from 35.86 billion to 38.278 billion. And the next page, when we are looking also on the shareholders fund, we've seen also that we've managed to increase our shareholders fund from 32.857 billion to 35.027 billion. And the same has increased due to the increase in the profit that we've made for the first half of the year. And the same, we were expecting that at the end of the second half of the year to grow to reach at around the 38 billion. Next page. In terms of key performance indicators in different areas that I have explained in terms of operating profit margin, we've seen that it has increased from 13% for the first half of the year 2024 to 29%. And this indicates that for this first half of the year, we've managed to record a significant increase in operating income that has led to that rise to 29%. And in terms of return on assets, we've seen that both return on asset and equity has increased, where in the previous year we were around 6%, but for the year 2025, we are almost 9%, and we are expecting also for the second half of the year to double around to 18%. And in terms of earning per share, we've seen also the significant increase from 90.95, which was recorded in the same period last year, to 137.82, which has been recorded for this year. And in terms of other parameters like cost to income ratio, we've managed to reduce from 59% to around 56%, and we are expecting by the end of December, it can be around below 55%, which most of financial institutions are recommending as the best practice for the cost to income ratios. And in terms of staff cost to revenue ratio, we have seen that last year we were around 40%, and for this year we are around 35%. And as I've explained, in the first half of the last year, our core revenue was lower due to the issue around the reopening of the government bond. But for this year, the core revenue has increased significantly, which has led to decrease in the staff cost to revenue ratio to around 35%. Next page. So in terms of future outlook, we are still optimistic that we are going to meet our target for the year 2025, as we are projecting that at the end of the year to have at least an equity turnover of 4% of our domestic market cap, and also to have our bond turnover to reach around 18% of our outstanding government bonds. And also we are very optimistic that we are going to increase our data vending revenue to reach around 4% of our total revenue for the year. And also we are still pursuing different engagement with the corporate companies who are issuing corporate bonds. So we are expecting also that we are going to realize also significant amount from the corporate bond issuance, also plus the issuance of Skuku products from Tanzba. Also, we are expecting that from those issuance, we are going to realize significant amount compared to the last year. Also, apart from that, we are still making different efforts to pursue stakeholders, including the government, to ensure that it's offloading some of the state-owned enterprises to the market, which we are expecting in the future. It will contribute to the increase in a listing fee to DSE. Also, it will increase the activities to the market, which in turn will contribute to the increase in transaction fee on equity to the exchange. Next page. So I have just also presented the projected financial statement for year 2025. So here we've just compared ourselves with 2024 performance, so where we were and where are we going to. So we are projecting that up to the end of year 2025, we are going to record a profit of 6.62 billion, which is an increase of 55%. And also the same results to the increase of earning per share from 179.33 to 278.02. Given that all the assumptions that we've put in our budget will materialize. So this is the end of my presentation. And I've seen that Mr. Peter has joined us. So before I allow for a Q&A session, maybe the presenters, they can welcome him.
Audio.
Hello,
Okay,
hi. Sorry, hi, Peter.
Okay, thank you, Lucas. Thank you, Faiz. Actually, I've been on since the beginning. I think initially you couldn't see me, but I've been on since Lucas started. First of all, I want to thank all the participants that have joined in this call. I also do want to thank iTrust team for organizing this. Like Faiz shared earlier, this is the first call that we've had to discuss our half-year performance results. And we do promise our investors, we do challenge our listed companies to share their performance on a quarterly basis. And us also being self-listed, we have to hold ourselves true to the same ask that we ask for listed companies. Just echoing what our CFO has shared, excuse me, our performance this first half has been a big improvement compared to where we were at the same quarter, sorry, in the same half last year. And most importantly, beyond just the numbers, the drivers, as number one, we've increased trading activity in the market. And I do want to thank you, our investors that are here, because your trading is what drives the blood of the exchange. And us as a company, just as a market, we feel that we can do a bit more in as much as we've improved year on year. And that more will come from us creating new products, make it easier for investors to come access the market. Our mobile trading platform has been a big revelation, and there's been a big drive of our performance in terms of number one, increasing the investor base, and number two, increasing the volumes and the turnover from the trading activities, which has been a big driver from our performance. As our CFO has shared, one area where we've dropped year on year is on our investment portfolio, but in a way that is also a blessing in this case, because number one, it dropped because we had to invest in terms of us moving to our new headquarters at Morocco Square, which reduced a bit of liquidity, surplus liquidity that we had. But also as an exchange, you want other revenues to not be the main drivers of your performance, but actually want the core business of the revenue, which means trading volumes, which means listing fees, etc., to be the main drivers of our performance. And as we look towards the end of the year, we project to do better, as the CFO shared, than what the board had approved earlier this year end of last year, and moving on to earlier this year to finalize the approval for the budget this year. We do project to do better than what the board had approved. And to share with you shareholders, yesterday we actually had our board meeting. It took a bit of time because there were clashes of calendars, but we had our board meeting yesterday, and the board did approve our projection to do better than what we had budgeted for. And we hope by end of Q3, we'll have another call, and hopefully we'll even project a bigger return than what we're projecting in our call today. Our hope as we get into the medium term, there will be new listings, particularly as the CFO shared, coming from some of the government held entities that are planning to come to list at the market on both the equities as well as on the bond desk. With that said, I usually prefer, whenever we have this kind of calls, to hear more from the audience rather than us as an entity speaking a lot. Back to you, Faiz.
Thank you so much, Peter. I think we have a few questions lined up. What we will do is, Peter, we will read out the questions to you from our end, and maybe you or Lucas can take it up from there. Winnie?
Okay, so starting us off, we have noticed major system downtime at DSE recently. Keen to know what initiatives are put in place to ensure sustainability of the system going forward.
So, Peter, do you
Okay.
want to take up this question, or shall we read a few more?
Okay, maybe a couple more, and then
Yeah.
I will respond, and Lucas and I will respond as they come through.
Okay. With the investor pool increasing, will operating expenses rise as well, or is DSE positioned to keep costs flat with increasing customer pool? Third question is, are there plans to attract more cross listings beyond the current EAC companies? Can I leave you with these three, and then we can ask more 3 questions after?
Okay, thank you. So to answer the first one, over the last week or so, we've been upgrading our hardware. Just to share with you investors that we had hardware that had become obsolete and wouldn't keep up with the updates that we're making on the software side, in terms of us growing the investor pool, in terms of us upgrading Kiganjani, all the integrations we have. So the downtime that we may have seen was probably during the transition period as we were going through the changes in the upgrading our hardware. I do want to take time to recognize our technology team for doing a very good job to get us through that. And we do take feedback that comes from you. If there are any challenges through the investors, through the broker community, do please communicate to us so that we are aware if there are any challenges, so that we can see what the challenges are and make sure that we resolve that accordingly. The second question, in terms of reducing the cost, yes, that's our ambition. And one of the challenges that we hold ourselves to, and one of the challenges that we even discuss with the regulatory bodies, with the government, is how can we try to minimize transactional costs in our exchange. We do work in an exchange whereby we're not just competing with other investment opportunities locally, but we also do compete with other exchanges regionally. And we have to make sure that we manage the transaction costs accordingly, so that we make it more affordable for more Tanzanians to access the market. And one of the things that we are trying to work through, discussing with the government, discussing with the TRA, etc., can we find a way to maybe get a relief in terms of some of the taxes that are being charged on transaction and on listing fees. So it's a work in progress. It's something that we are aspiring to get to a better point so that we can get more investors, both locally and those in the diaspora, to access our market. Just to share with you a personal story, one of my childhood friends who has recently, for a while now, him and the family relocated to the United Kingdom. He challenged me saying that it's cheaper for him as a Tanzanian diaspora, who's a British citizen now, to invest in the JSE than to invest on the DSE. And that is something that I took it as a challenge for us to see as an exchange, working with regulators, working with the government to see how can we reduce those transactional costs to get more Tanzanians locally and in diaspora to invest more. And the last question was on the cross-listing. Yes, we are looking at cross-listings for us to also go out to the market. And a couple of weeks ago, I had a discussion with Professor Same and Chairman Honor Jabali to discuss in terms what is optimal. Do we take more of our companies to go abroad or do we bring more companies locally? And I do want to take time to recognize iTrust for working hard to bring more companies to come to cross-list on our exchange. In particular, one of the areas that we are looking at as an exchange, and also iTrust is helping us with that, is companies that have their primary operations in Tanzania, but they have maybe incorporation in other jurisdictions, or companies that are listed in other markets, but they have subsidiaries here, to see how can we get them on board. I'm sure some of our investors that are on the call, you've seen efforts that iTrust has made to get the likes of Safaricom to do investors call here to try to see if we can get them cross-listed here. So it goes both ways. I know Professor Asame has a view that maybe we need to bring more companies here, but I also believe that we can also take our companies outside because it would also elevate the profile of our companies here. We've done a very good job in terms of from the bond side, having the likes of NMB, CRDB listing their bonds, Tangawasa on foreign exchanges. Maybe we can also consider having some of our companies also listed on the equity board and other exchanges.
Okay, thank you very much for that. Keeping it in looking at other markets, we have a question that says, as Nairobi Stock Exchange has recently allowed to trade 1 share per order, what is the development for DSE regarding placing orders less than 10? And then I'll bunch these two together. What steps are being taken to increase product offerings such as ETFs, derivatives, etc.? And then this one is titled Short Selling Framework. In the last call, the CEO hinted that the framework for short selling and ETFs, we're seeing progress on the ETFs. What should we expect on the short selling framework, as it is one of the aspects that could increase market activity and the revenue of the exchange? So we have with regards to the share per order and the ETFs.
Okay, thank you. And I was smiling as I was hearing the question. So Frank, the NSC CEO is a good friend of mine, and one of the discussions that we've had recently is the move towards trading 1 share. There are some merits towards going in that direction, but it also does potentially increase the overhead cost in terms of trying to manage trading on 1 share. I think for this ticket sizes of most of our counters, having 10 share minimum is still a reasonable point to be at. Maybe down the road, we can look at maybe reducing that. And I would welcome the view from Faiz and the team here and Professor Osame. But I think at this point in time, when you look at some of the counters that are below 500 shillings, below 300 shillings, trying to trade on one share, maybe when you look at the overall cost in terms from what the brokers need to manage, what the exchanges to manage, what the regulators to manage, may not be necessarily ideal at this point. But I stand to be corrected, and I'll take challenge from the investors and the experts on the call.
Yeah, Peter, I think instead of challenging you, in fact, I will reinforce the comment you just made. Brokerage commission and other costs are fixed costs. There's a minimum. And for somebody to trade one share really is not economical. These are not called capital markets for the purpose of trading one share. I think that not only one share, but I think even 10 is not economical. And I think the exchange needs to actually be looking the other way, whereby we actually can get some minimum viable number of shares to be traded. I think a lot of, for most cases, a lot of 100 shares and above. Also, there has to be minimum, viable parts or ownership, because companies are ending up with shareholders who own one share. There is no way they can communicate with those investors. There is no way they can keep. You cannot keep a register of investors owning one share, 300, 500, 1,000 shillings. These are not going to be economical in terms of the cost. Neither do they actually provide any economic value to the investor. They end up being dead capital. And in order to avoid dead capital, we think that holdings, minimum viable limits should be around probably 500,000 shillings on a counter basis to make it worthwhile for listed companies. Otherwise, we actually damage the supply side, because companies will not list knowing that they can end up with 300,000 clients who all own 10 shares or one share. And that, I think, is extremely bad for the Dar es Salaam Stock Exchange long term. So I think we need to look at the minimums, and we need to look at not only trading minimums, but also holding minimums. So the registers do not get too much bloated with shareholders who really have no, and then those shareholders have no interest to follow the company. Even the dividend cannot be paid. The cost of paying the dividend becomes too high. As you all know, even a TIS transfer, a TIP transfer, any transfer costs 1,000 shillings, 2,000 shillings, more valuable than one share of most of the counters. Therefore, I agree with you, Peter. That is not the right way to go.
Okay, thank you, Prof. And just to add a bit more on one thing that Prof shared, trying to maintain IT systems, be it an exchange, be it a bank, etc., to have just one account, there are license fees that we have to pay for every account that we open. So just maintaining that register, etc., like Prof said, it's a cost. So sometimes it becomes a detriment to the market if we try to maintain very small holdings. Like Prof said, if you've sold your shares and somehow maybe between the price that your offer price was, etc., the bid price, maybe you may not sell the entire shares that you wanted to sell, you remain with one or two shares. Having those accounts basically becomes a cost that doesn't help the market. And if we have to recover that cost, it may end up being detrimental to the rest of the investors, because maybe we may need to charge higher fees to make sure that we can keep the lights open, so that we don't wake up one morning and say the exchange has to shut down because we cannot pay the bills. Through you, Faiz, if I can move to the other question around the new products. So in terms of new products, there is ETS. There's been good progress. I'm sure you've seen one of our brokers, Vertex International, has got an approval, and we going through the IPO right now for the ETS that they've issued. That's just the beginning. There are more products that are coming through. Some of the products that we're looking at, including, for example, fractional shares, to look at counters that notionally may be perceived to be expensive. Can we find a way to introduce those to the market so that we can get more investors coming in and trading on those? And in terms of derivatives, and also connect this to the short selling, it's a work that I cannot guarantee because it's above my paycheck. We do have to work with the regulator to allow us to allow brokers to allow short selling, which will also include number one, if you want to allow short selling, you also have to allow securities lending. which is some of the work that is to share with you investors is happening. Some of our market participants, including ITROS, are trying to look at that to introduce things around securities lending, and then that can get into allow short selling, which then inadvertently will also allow us to maybe trade certain derivatives, which you cannot be easily priced if you don't allow for short selling. And last but not least, on that point, one of the work that we're trying to work with other regulators is to also adopt international standards that would allow us to be able to get into derivative agreements. So to allow is the accommodation, etc. Yes, there is some work that the BOT and the Attorney General did to allow some allowances on ISDA, but if you want to trade derivatives internationally, you have to accept certain provisions that are part of the international standards. But it's all part of the work in progress that we're doing as market participants to get us to that point.
Thank you very much for that. I would like to group these two questions together. The first one is, there's a notable decrease in government securities, but assets have increased. And then the next one reads, we need more clarity on the 30% drop in the government securities. Have these assets been moved because the company had to invest in new building, non-income generating assets, or has the investment approach changed? What is the company's new investment approach?
Okay, thank you. If my understanding is correct, you're asking about government securities in terms of our investment portfolio, not necessarily the issuance from the government, right?
I think that's correct.
Okay, thank you. So as the CFO shared earlier, and I alluded to this a bit, having moved to our new location, there are some bills that we had to pay NHC because we purchased that space, we own it. And some of the bills we had to pay at the beginning of this year. So that some of that cash that we were putting up in our reserves, so that once we move in and we have to settle the bill with NHC, that cash was being invested in government securities as we were anticipating to move to our new building. But after we moved, then there's some bills that we had to pay, and that cash reserve had dropped a bit. But as we keep going the market and we collect more, then we'll invest. But as I alluded to earlier, we do not want to drop our revenue growth in any particular line, but we'll still wish these other revenues that are not core part of the market to not necessarily be the main drivers. So over the last few years, we were making good profits from investment in government securities, but our wish is that our bread and butter should be number one from our traditional revenue streams like trading and listing fees. But beyond that, we also do have new streams like trading and data sales that are growing, as the CFO pointed out earlier. We're pushing to get to 4% of our revenue stream, but over time, we want to grow that more. Some of the exchanges are actually driving 25% of their revenue from that space. Another area that we're looking at is from our premises, we do have the first and second floor fully owned by the DSE, and the third floor, we own about 60% of so. Some of it is still open for future expansion of the exchange, but some of it is our trading space and our public gallery. And from that, we are open, and I do invite our audience here. If you have an event and you need to look for space to rent, we do rent that space out, and you can help us grow our revenue stream from that. And down the road, in the medium term, we hope that maybe we'll invest more in our data center, because some exchanges actually make money from becoming secondary data center hosters. Right now, we are looking to host with other service providers, but maybe as we do grow the business, we can grow more data center and maybe host some of your businesses to come bring data space from us.
Thank you. We have other questions as well. One reads, are there any plans to expand the scope of trading by introducing share options, call and put options trading? And then we have another one. How are you positioned to solve digital challenges on the web and mobile platforms caused by regular system misbehavior? Example, some securities are not available to buy on the web platform. Vertex IPO not listed on web platform, but available on mobile platform. There are also network issues with stock transfer. So I'll leave you with these two.
So the first question, I think in a way I answered already because they're derivatives. So as we work through the framework in terms of us introducing things like increasing the short selling, because some of the trying to price derivatives also, you have to be able to have these kinds of frameworks in place, etc. So as I shared earlier, some of the work that we're trying to do as an exchange and working with other regulators is to make sure that we have adoptions of international standards that would allow us to be able to price this properly and be able to say, in the event that there is disagreements, you can try to settle based on what ISDA requires, etc. Number two is also trying to work with the market community in general, in terms of also equipping ourselves as the exchange, equipping brokers, etc., to be able to trade in this kind of instruments, because they are very sophisticated. So you have to make sure that you know what you're doing. But hopefully in the very near future, we'll introduce at least some basic derivatives that would not necessarily need very complicated math and law to price and trade accordingly. And on the second question, in terms of the system challenges, as I shared, we have been upgrading our hardware system. We also continuously working, and I reiterate the question that the ask that I shared earlier, give us this feedback, whatever you face challenges. Sometimes there's a bit of disconnect, and I would be very frank, and a bit of disconnect between the app and the mobile, the web platform, and sometimes a bit of disconnect between our front office system and the CSDR system. So it's something that we always try to work with other partners, working with our system vendor, is to make sure that we improve this. And one of the things that we're trying to work towards is down the road, we do not want to necessarily reinvent the wheel, but as you grow, you start maybe procuring systems from others, but maybe down the road, sometimes there may be a value in us maybe developing our own. And one of the things that we keep challenging ourselves is, what is the value add? Do we develop our own system, or do we work with a vendor? What are the pros and cons? And these are things that as we develop our next 5-year plan, because we're in our 3rd year of our current 5-year strategic plan, you will look at that, our IT systems, our software, etc. Do we develop our own? Do we buy from someone? If you buy from someone, how do we make sure that we can robustly be able to update the system if there are any challenges? How quickly can we turn around between what our IT gurus in-house do vis-a-vis what the vendors do? And that said, I'll pose it back to Faiz, because I know he has big coffers than I do. Maybe you can develop something that we can buy from you, provided that it doesn't pose challenges with
Thank you,
other
Peter.
market
But
players.
I thank you for the confidence that you have in us. Asante sana. But I think we are done with most of the questions. Once again, Peter and Lucas, asante ni sana. Thank you so much for being here, giving us time to us and also our investors. But yeah, I understand your predicament on the digital side, Peter. I share that with you. I understand the problems. But no system without a problem is an IT system. So it has to have the problems. I understand your problem. So anyways, I would like to then close this meeting. Thank you so much once again, everyone, all the viewers, and obviously the senior management team at DSE. Asanteni sana. Thank you once again.
Thanks a lot. Have a nice day.
Thank you.
Okay.